At the webinar. Good day to one and all. This is Dr. Sivaraman of ironindices.com. I normally give once a month a twin webinar focusing exclusively on the trading strategies. So, which is named Tracking the Forex Market Together. So, it will be given in two parts. Part 1 now between 9 and 9:45 GMT, and part 2 will be from 14 to 14:45 GMT. During that of the part 1, I will use the simple market tracking technique and identify how exactly the players are expected to make the moves in the two majors and two commodity pairs, and also use the effective trading strategy so that I take minimal risk and maximum profit during this particular trade. And if you follow that, you'll be able to consistently earn from that of the market. So let us now track the Forex market. So for that, I use the live market quote page, and this is the live market quote page. With the help of the live market quote page, we'll be able to see where exactly the market is, whether Euro, GBP, or USD Yen, USD CH of the majors, whether they are showing the USD weakening or the USD gaining move, or the mixed move or the contrarian move. And what about the two commodity pairs, Canadian dollar and Australian dollar, whether they are making the USD gaining or the USD weakening move. We try to identify it with the help of the net change. And this net change, when it is in red, it shows that Euro has lost about 3 pips from that of yesterday's close. USD Yen has lost about 14 pips. It is in negative net change. And GBP has lost about 30 pips from that of yesterday US session close. And USD CHF is unchanged. And USD CAD has just lost about 4 pips. And AUD has gained about 27 pips. So this is what you come across from that of yesterday US session, and all through that of the Japanese session, and now we are in that of the European session. So how exactly the currencies are making the moves, we will be able to understand. So you come across that Euro is showing negative net change as the USD gaining move, whereas USD Yen is showing negative net change because it is a denominator currency. When it shows negative net change, that means Yen is becoming stronger. So that is USD weakening move. When one currency is showing the USD gaining move and another currency is showing the USD weakening move, which is referred as a contrarian move. So they are at the moment making the contrarian move. Whenever they make the contrarian move, we understand that they are handling the crosses. Then coming to that of the other denominator currency, USD CHF, which is unchanged. Then in the case of the commodity pairs, USD CAD is showing 4 pips negative net change. That means it is showing USD weakening move. Aussie is also showing the positive net change, and that is USD weakening move. So they are showing in the case of the crosses, or in the case of commodity pairs, the USD weakening move, and in the case of the majors, the contrarian move. And whenever they make such moves, that it shows very clearly they are trying to handle the crosses, and then they will come to that of the majors. So first we try to understand what they are trying to do and which pair they are trying to handle. Then looking at the market, we try to find the spread between the high and the low. Wherever the currency is showing more than 40 pip spread between the high and the low, and that means those currencies they are trying to handle it. And in the case of GBP, and actually what is showing as 7180 is yesterday's high, Friday's high. And still it has not changed it. And today's high is 1.7145. You take it from the platform. And then it has come down already. So GBP is making a downward move when compared to that of Euro in a much magnified way when compared to that of Euro. So as I explained in fxtrade.net, the blog yesterday, that GBP is the currency which is going to lose its value. As a result, we'll find the market sentiment will be changed. So the players gained the levels in the case of GBP in order to create the bullish feel. And afterwards, many people thought that euro is going to make, first of all, the drop because the sentiment is very weak as far as euro is concerned. But the players has simply gained the levels in the case of euro and holding it for past 2 days, and they are just making the slide in the case of GBP. And that is what we need to read, and how exactly the players are trying to make the moves in the market. So they have specific pattern. They induce the traders to trust something, and later on they try to make a different move. Thereby, they are able to show some unassuming moves to the traders. And once the surprise moves happen in the market, you find the traders going for the crisis management, or they go in for emotional trading. So we will come to that step by step. First of all, in order to track the market, I follow the following things. The first one is the algorithm-based, statistically derived forecast. So forecast is the one which gives how exactly the market is going to behave. It's an information pertaining to the future of the market, whether euro has to go up or come down, and that is forecast. So many of the occasions what you come across is that people do the analysis of the currency using the chart and say that the market commentary. And as far as the forecast is concerned, invariably it is derived that either euro can go up, in the event if it goes up, it can go up to 1.3675. And in the event if it comes down, it can come down to 1.35. So that leaves the uncertainty, and we have to find out in which way the currency has to move. So we don't get the clarity. And instead of that, I developed an algorithm with which I am giving the forecast, which gives the time-based, the expected market moves. So that I give it on Mondays on a daily basis, session-wise, how the currencies are expected to make the moves. So here you come across on 7th, yesterday's move, they just formed up during the European session and then made the slide in the case of euro. And GBP, if you see it, they have been continuously dropping, and they just formed up during the start of the Japanese session yesterday, started making the slide. Euro, they started making the forming up from the European session, and they are holding it after making small slide. So you find that GBP and USD CAD, they have started already making the USD weakening move during the start of the Japanese session yesterday, and started making the USD gaining move. And they are expected to make the swing and slide, and then small firm up, and then continue to slide. And these firm up, they are not participating. And instead, euro and Aussie are participating during this firming up. So if you look into the live market quote page, you'll be able to understand they are making a specific type of move this time. That is GBP and Canadian dollar, they react first. Then later on, they continue to make the USD gaining move, because on a Monday, they are expected to make the week beginning false move, and they finished it early during start of the Japanese session and started making the USD gaining moves. And the rest of the currencies like euro, USDN, and CHF, also Australian dollar, they are doing the USD weakening move they were doing the USD weakening move during start of the European session yesterday, and then started making the slide. And again, they are firming up today, now during the European session. Whereas GBP and Canadian dollar, already they have finished the stop-ins, and they started making the USD gaining move. So this we need to identify with the help of the live market quote page. What currencies they are handling it. Now you find that in the case of Aussie, they just increased the spread almost closer to the 40 pips. And then the rest of the currencies GBP, they have done it. And the other currencies, it is not 40 pips yet. But so you have to watch those currencies and find out when they are making 40 pip spread. And later on, if we commit, when they are closer to that of the high, or closer to that of the low, if we commit the positions, we'll be able to easily book profit. So first of all, we try to find out the forecast, what it says. So today is 8th July. The swing and slide, they would have done it during the European Japanese session, and they made a small slide. Afterwards, they are firming it up. Now, in the case of Euro, that's what, when I say it is firming up, they are firming up only in the case of Euro and Aussie. No? And the time is 9:11 GMT. The session starts around 7:30 GMT. From there, they gained briefly the levels and then making the slide. And again, they are expected to firm up a little bit around that of the late European session and start making the slide. So then I will try to take a sell position during the firming up and then book profit during the slides. So this is the plan based on the forecast. So first of all, we look into the forecast. And identify what sort of trade we can do it. Then we find in the forecast with the help of the market reading technique. So what is market reading technique? We note down the initial lows and the highs of the 4 majors and 2 commodity pairs around 3:30 GMT on a daily basis. So market is 24 hours market, and we note down around 3:30 GMT the initial low and the initial high. There are 4 majors and 2 commodity pairs. Today, Euro formed the low as 1.3603 and the high was 1.3610. So Euro 1.3610, once it has formed around 3:30, they have not breached it. But the low currently is 1.3588, whereas the initial low was 1.3603. So that means what? They just came below that of the initial low 1.3603 and holding below there for more than 30 minutes. So they intend to make the slide in the case of Euro. That is why you don't come across active moves in the case of Euro. And they already finished an upward move and slowly they are making the slide. So you come across the trade as a simple basic trade as sell near that of the high and buy near that of the low. But when they breach the initial low and staying below there for more than 30 minutes, we sell below that of the initial low, or the opposite will be we buy above that of the initial high as a technical trade, and then try to close the position as and when they try to move the market in our favor, and we keep stop at entry once the position makes about 15-20 pips profit, and then we try to close the position with more profit when they make for the downward move. So we try to do a technical trade in the case of Euro because it is staying below that of the initial low. Then in the case of GBP, 1.71, it shows 1. Okay. Initially, it was showing 1.7108 around 3:30 GMT in this quote page, but whereas the actual low was 1.7128. So in the case of GBP also, they breached the initial low and they formed the new low 1.7086. They just come below that of the psychological level 1.71 and holding around that of 1.7097. So here again, we can do a technical sell trade because it is staying below that of the initial low and the initial high, they are not breached. 1.7145, they are not gone above. And in the case of yen, 101.69 is the initial low, 101.90 is the initial high. That means they are just making small swing within this range and they are not very active in the case of USD yen. Why they are holding it like this? Because when they want to drop Euro and GBP, when USD yen is held with a negative net change so that the yen crosses will come down fast. That is why they are holding it that way. Nothing special about the respective government. It is a question of holding it low so that when they drop euro and GBP, USD yen is also with a negative net change, then yen crosses euro and GBP yen will come down. Then in the case of CHF, 89.30 and 89.36. 89.30 low, they are not reached it. 89.46 has become the new high, and they are holding around that of 89.36. So here again, we can do a technical trade of buy above that of the initial high, because they are staying above the initial high for more than 30 minutes, even from start of this particular session, European session. Then in the case of Canadian dollar, 1.0677, they just breached the initial low by 1 pip and gone up, and the initial high is 1.0686. They went up to 95 and come down, and they are just holding it. After making a brief downward stop and brief upward stop, and they are holding in the middle. And in the case of Aussie, 93.66 is the low and 93.96 is the high, and they just breached the high and formed 94.06 and come below that of the initial high. So what they have gone up to 94.04 is a brief session start upward stop. Afterwards, they have come below that of 93.96. So you will take a sell position. So we take a decision with the help of the market reading technique. So in the market reading, what we do, we just note down the initial lows and the highs in 4 major simple commodity pairs, and then we try to identify what type of moves they intend to do. And they are just making in all the currencies the intentional move, a slow move they are doing. But we will not be happy with it of the forecast alone and the forecast and the market reading, because you know that in the market, there can be always quick moves happening. The market is highly sensitive for rumors, sensitive for sudden breaking news, etc. And we cannot take a simple position and try to keep it as an exposed position without a stop. So the normal condition will be use a 30 pip stop, so that normally they make a swing for about 23 pips, 15 to 23 pips, near that of the high, near that of the low. If you keep about 30 pips stop, and they are unlikely to fill it. In the event that they fill the stop, that means they will be making a move opposite to your expectations, so that we can simply close the position if we use the stop. But instead, if the hedging facility is available in our trading platform, if you use 30 pips hedge order, and if the market fills your hedge order, and then you might be holding a high level buy and a lower level sell. And only thing is, assume that somebody has taken a buy and another person has taken a sell. How they are going to react to that of the market for the buy position as well as the sell position. In the same way, you try to handle it, you will be able to book profit on either side or cut one of the position, understanding that it was filled during a stop, and so we try to close the hedge with 1 or 2 pip loss or stop at the entry, and then try to book profit on the sell side. So otherwise, if the market moves and shows profit in your buy side, you simply close your sell position and book profit on the buy side. So you can take alternative trading strategy, provided you are focusing or well versed with it of the trading using the hedging facility. We will see one by one. So for all these market understanding and the type of moves, because as I explained that stop and means they will make move only for 30 minutes and extended move for 2 hours, and intentional move is for 2 sessions and the start of the 3rd session. So we need to understand when exactly they start such moves. So always they start the moves from the start of the session, because they will be making the moves in the case of majors during that of the early and the late sessions. And during the mid sessions, they handle the crosses. So now we are in the European session. After that 9 GMT, from 9 to 11:30 GMT, they'll be handling the crosses. That is why you come across the contrarian moves are happening now, and they focus on it. Later on, from 11:30 GMT to 13 GMT, they'll be handling the majors. Then 13 to 13:30 GMT will be the gap time before the start of the US session, and 13 to 14 GMT will be the first 30 minutes of the US session start time. And then afterwards, the early session will be up to 15 GMT. So I'll come back by 14 GMT and explain to you and track the market up to 15 GMT and explain how exactly they are making the moves during that of the early part of the European session and the early part of the US session, how we are able to easily follow them when you follow the market timings. And also keep in mind, they handle only two currencies at a given time. So what are those two currencies? We try to identify, and those currencies normally make more spread when compared to the rest of the currencies. Normally, they make about 40 pips spread. So at the moment, they are handling Aussie and also GBP, and they are focusing on it. The other currencies, simply they are holding it. So you have to identify those currencies and try to take positions in them so that you'll be able to quickly book profit. Then this is the explanation with regard to the live market code page, how exactly it can be used. Then this is what I explained as the 5 different type of moves they are doing it. Stop is the move, they do it during the early and the late sessions. And they just go above that of the initial high or go below that of the initial low for 15 to 25 pips and reverse the market in less than 30 minutes. So they make an upward stop and then start making the downward move. And they make a downward stop and start making the upward move. What is the purpose? So they just see that they make an upward stop and so that those who have got the high level sell near that of the high, their stops are being filled. And also when the traders find that it is breaching this resistance and going above, the traders think that, okay, market is going in the wrong direction and I am holding a position which could become unfavorable, so they may cut the position. So they make a quick upward move as a stop. And if the stop is placed, they will hit the stop. Otherwise, they will induce the traders to do a short covering and afterwards slowly come down so that there is no short sellers in the market, and only those who have got the strong mind understanding the market alone will be holding the short positions. But by triggering the stops, the players build the sell positions in the market, and then later on they drop the market, and all those who try to buy thinking that the market will go up will come and liquidate the positions later on when they slowly drop further down. Like GBP, how they have done it. They have created the bullish field and now started making the slide. Those who have taken the buy position near that of 1.7108, 1.7123, they thought that it's a good support. GBP is expected to go to 1.72. So they are dropped below. So they will induce the bullish field and then induce the traders to liquidate the long positions. So for that, they need to do the stop. And similarly, they do the false move. They go up to that of the high without breaching the high, they come down. They go up to that of 1.3610 and come down. So that is called as the false move. They pretend as if it is going to breach the high and go above, but they don't breach and come down very fast. So this is another move, a quick move, just to deceive the traders. And especially they do it before that of the data release time. Then extended move is the one, and it's also a quick move which stays for about 30 minutes to 2 hours. So they breach the high and stay above there for more than 30 minutes, and after 2 hours they hold above and start reversing it. That's called extended move. And this extended move alternates with that of the intentional move. Intentional move is the one which exposes the intentions of the players, what they intend to do, whether they intend to drop Iran GBP or they intend to rise Iran GBP. We'll be able to identify whenever they are making the intentional move. Intentional move will be a slow move, pip by pip move, and it will appear the market is very calm, but slowly they will come down pip by pip. And as that session proceeds, you will find the net change will increase slowly, and they will not make a pullback during that. So that is intentional move. Then they make swings during that of the sessions. During the market sessions, they just make the move between the high and the low, what they are doing it in the case of USD-yen. Without breaching the high, without breaching the low, they just make up and down move, and that is called as the swing. Then there is another move which is called the extended stop and that they do it only during the monthly trend reversal time. In the case of Australian dollar, you know that from 0.94, they went up to 0.9504 and then came down quickly to 0.94 and came further down to 0.9330. No? From 94, they went up and quickly dropped and gone below this. And that is called extended stop and move. They just gain all the way and hit all the stops up to 100 pips so that there won't be any short seller in the market. And only those who have got stop shorts without a stop and they have got adequate equity to hold the short position alone will be holding the sell positions. And they dropped it up to 0.9330. And that is called extended stop. That they do it during the trend reversal. So these are all the only type of moves on a daily basis, weekly basis, and yearly basis. They try to do it. So if you become very well aware of how they are making these moves, then they cannot give any surprise to you. You'll be able to predict what is going to be the next move. And these moves are to be related to the initial highs and the initial lows. That is why we note down the initial highs and the lows around 3:30 GMT, and that is the time they set. So it is not my own provocation, it is the players' secret. And so they note down the initial lows and the highs, and they try to use it for their purpose of tracking, moving the market. So we try to track it and we try to take positions accordingly. And this is the explanation with regard to the hedging, the trading strategy. So we try to sell if the market is near the high, or we try to book profit of 30, 40 pips. Later on, exit it. And in the event, if they just breach the low and stay below that of the initial low, we do a technical sell trade below that of the low and technical buy trade above that of the high. In the event, if the hedge is filled, the three conditions are very vital. That is, if the hedge is making loss for 10 to 30 minutes, that means they filled it during that of the stop point. So automatically, they are expected to drop further down. So in such a case, close the hedging with a nominal loss of 1 or 2 pips and try to book profit on the downside move when you are holding a sell position. In the event, if the hedging is making profit for more than 30 minutes, that means you are taking a position against the market move. And they are either doing an extended move or an intentional move. So you need to find out, wait for 2 hours, keep stop at entry in the hedge. See whether they stopped cutting the new high. They have stopped cutting the new high and they are not forming any more new high. Then wait for them up to 2 o'clock. And if they are making an intentional move, every 30 minutes, they will try to breach the new high and go up. As long as they are not breaching it, that means it is only an extended move just for 2 hours, and afterwards they are expected to make the slide. So you keep stop at entry, and if they don't breach the new high, for more than 30 minutes, you can book profit on the hedge and keep another hedge order above that 30 pips above And once they start making the slide and come below that of the initial high, like in Australian dollar, and if it is hedged, we can simply book profit on the upside and the hedge, and then keep another hedge order. And when this come below that of the initial low, initial high, then you move it to that of the original sell level or original hedge order level. Then they will continue to drop. You'll be able to book profit on the sell side. So if the hedging is really making profit, you are confused whether market, you are holding a position in the wrong direction. So what you can do is you wait for the entire move for 2 sessions to happen. Okay, let them finish the intentional move. Either they make an upward move of about 100 to 150 pips or a downward move of 100 to 150 pips. Your position is hedged. And whichever the position which is making about 100 pips profit, you book profit on the downside, on the sell position. Then keep another hedge order 30 pips below. And then next day you find that they start reversing the market and going up. And at that time, you can just trail the hedge order upward as they rise and try to book the profit on the buy side as well. And if you want to be a smart trader, you can take another buy after the drop of 100 pips. And if you buy, do the average trading, every drop of 100 to 150 pips, it will not lead to over trading. But if you try to do the averaging every 15, 20 pips, that will lead to over trading within a day. So when they drop 100 pips, take another buy, then close both the highs, both the buys above their high, above their average level, so that you earn a net profit. So on the sell side, you have booked profit. On the buy side, above the average, you make a net profit. So you continue to hold the profit from every trade. So this is what we need to understand. And if you understand well how to use the trade hedging effectively without any market fear, then nobody can stop you from making money. We will come to the trading now. As I explained that in the case of euro, 1.3603 was the initial low, and it is still staying below. So I'll take a sell position. $1.3599 with the buy stop 30 pips above. $1.3629. Then the exit will be about 45 pips. Why 45 pips? When the mobility or when the momentum is very slow, then you will come across invariably the market will show a profit of 30 to 45 pips. When they are making quick moves, then there is a chance that you will be able to really make more profit. Now they have come to 1.36 level. Of course, there will be a slight move, and don't be perturbed with that. Then GBP again, 1.7102. I'll try to take a sell. With the buy stop. $30 pips above the hedge order. Okay. Now, in the case of yen, we are not taking anything. And in the case of Canadian dollar, they breached the high and they are staying there, but spread is very low. Here again, spread is very low. Aussie is there. Okay. They just come below that of the initial high after making an upward stop. So I'll take a sell position. So with the buy stop 30 pips above. Okay. So these are all the positions I have taken straight, no limit order. So these are all the three positions I envisaged. And later on, I'll explain to you how exactly I handle those positions during this particular European session and how I booked the profit. I will show it during part 2 of this particular webinar. Again, I have not taken a position. And also in the case of Canadian dollar, I have not taken a position. Probably during the US session, I'll try to take when they increase the spread. Okay. And if you've got any questions, you can ask me. We have another 10 minutes to go. So I'll come back by 14 GMT and try to track the market for you, and also try to review the market during the US session, how exactly the net change, the high and the low, they are altered it. And also the positions what I have taken now, I'll show the results. So I will take up the questions now. And Mike Martin, GBP is nearly minus 100 pips. See, actually the live market put page is showing wrongly the high. Actually, it is 71.45 is the high. From there, they made the drop today. And this is 71.80 is yesterday's high. And the live market put page is not altering the highs and the lows on a daily basis here. It's a very unfortunate situation. So we have to just compare it with the trading platform and do it. You can also get the live market quote page from FX Trade, the quote pages, and that also you can use it. Okay, slide is pullback. No, slide means a slow downward move is called a slide. See, now pip by pip, euro is making a slide. GBP is making a pip by pip move. So from 1.71002, they come to 1.7100, then 1.7099, 1.7098, like that. So they hold and build sell positions. They hold so that somebody who has taken a sell position in the scalping will come and buy, thinking that it may not drop big. So that is why they test the patience and build their positions without the trader's knowledge. That is the trick of their operation. And Gerald, please help me with a time for the next webinar in South Africa time. Sir, let me again explain to you, never take the market to your local time. Because if you try to take the market to your local time, then you may not be able to understand the session-wise moves they are doing it. Always try to study the market in relation to that of the global time. The global time is the Greenwich Meridian time. So that the market is 24 hours, Greenwich Meridian time is of a 24 hours nature. So that you'll be able to study right from the start during that of the Japanese session up to the end of the US session as a single day move. It is not as and when the sun rises in different countries, it is a day. It is a 24 hours day without a night. So in GMT, you do not call it as a PM. Many people call it as 2 p.m. GMT. That is wrong. We have to say it as 14 GMT because there is no night as far as the GMT time is concerned. So kindly follow the market using the GMT time, not Eastern time. or not your South African time. See, we are all misguided to use such local times, and that is not the right way. It is next to impossible to understand the market if we use the local time. So don't take the market to your local time. Instead, you come to that of the international time, and it is not very difficult. See, current GMT time is here. It is 9:41 GMT. So you currently look into your computer, what is a local time? Is it difficult for you to understand? Okay, my local time, you can just see it from your computer. And then this is the GMT time you come across in fxtrade.com homepage. There again, you have to set the GMT. Otherwise, it will show your local time. So when you are logging in and your preference is set as GMT time, then you will be able to easily follow the market using the GMT time. So try to understand that the market is going to be 24 hours. When you are sleeping, still the market is active. If you follow the market using GMT time, then only you will be able to understand, even though you are sleeping, there is no end to the market, unlike that of the stock market. Stock market gets over in your local country, but the currency market continues to be operating. Then demand. Could you please clarify the timings of the initial highs and the low is to be recorded? The initial highs and the lows, they just set it between 2:30 and 3:30 GMT. 2:30, not 20:30. So you need not watch from 2:30. You simply keep the live market code page and set in GMT time. But unfortunately, this code page is showing the New York time or the Eastern Standard Time. So you try to refer it to that of GMT time. It is 4 hours behind. So when it comes to about 3:30 GMT, then you note down the initial lows and the highs in 4 majors and 2 commodity pairs. Use it as a reference level for the entire day. That is what the players do it because they are very rich. They don't go in for sophisticated calculations. Once you become very rich, your mind does not think. So they want the system to be as simple as possible. And only advantage is they get the insider information where the cluster stocks are. So they pump in huge money and hit the stocks and earn their money. Simple. So they are not taking positions like us. They suddenly come in and trigger the stops and earn their money. Suddenly come in and trigger the stop in the opposite side and earn money. So that way they try to do it. So we need to read them very carefully. But in order to keep the market alive, they just make the floating. Small stop and small slide, small form up, all those things with the help of the bank. So we should be able to understand all quick moves or false moves in the market. So before making a big drop, what they do is they quickly make an upward stop. And once all the stops are exposed, they get the increased liquidity and dump all the conversions. So automatically they take the high level sells and let loose the market like this. Market slowly, you find that you try to buy, afterwards it is not pulling up. So what happens? You try to sell the position without making much of a loss. You try to sell, then again buy, thinking that it will make a pullback. No, then sell back. You buy, wait for some pullback. It is not happening, sell. So pip by pip, you find the market is making a drop. In that, what they do is they facilitate by selling it slowly, build a small sell level, sell positions as the market slide. So whoever is buying has to liquidate it at the lower level, at the current scenario. This is what the intentional move is. Afterwards, when they make one quick downward move during the third session and reverse, you find that that is the buy level for them. Always quick moves are false move. When they quickly drop, that means they wanted to rise. When they quickly rise, that means they wanted to drop. That's what we need to understand. And you would have seen many times but still you are not able to get it. Why? Because of the market fear. Why the market fear? Because we have become uncertain about the market. So as long as the uncertainty prevails, you find it extremely difficult to understand the market. So get rid of the uncertainty, you find market, you can just like that follow. There is no difficulty at all. Okay. Then Chaukian. The forecast said that the swing and firm up. Does that mean that it is better to sell during that of the end of European session? End of European session also it will be around the same level. That is why, because I am giving the webinar now, so I have to take the position in your presence, not simply say that I will take the position by 11:30 and show the results by then. So that is why I taken, but you can wait till that of the 11:30 GMT and take the sell position and try to put profit also. Then Merxi. Some say use daily close to 17 New York time. See, daily close time is one, and that is being used in order to find how exactly they are opening it. See, normally what happens, they look into that of the levels. If GBP close above 1.7150 for 3 days, then it can go up further. And this sort of sentiments, they try to derive it, and some of the convincing conclusions they use derive it based on statistical models. And it is not necessarily the market has to obey such rules. As long as the market is manipulated, they pretend as if the market is going to behave as per the expectations of the statistics, and suddenly it reverses. And the simple reason for that of the technical flaw is the fundamental news. Technically, everybody was expecting GBP to go up, but GBP has come down. What is a flaw? Fundamental flaw. Okay, fundamentally GBP has to come down. Okay, now we think that, okay, GBP has to come down. On Thursday, they are going to come out with the interest rate decision on GBP, and everybody will be thinking that GBP will go up, but they will make a drop. Even though the interest rate is much higher when compared to that of euro, still they will continue to drop. And they will simply say that, no, they are delaying the increase in interest rate. They can give any sort of attribute and make the moves in the market. So all the explanations are nothing but the attributes. So if you understand, they are all nothing but attributes. They are not the true factor. The true factor is the players need to deceive the traders and earn money. And some say that GMT plus 2 chart are best. Okay, you try various methods and you try to develop your own system, whichever is convincing you, which is able to convincing results for you. Do you use trailing stop? Yes, I use trailing stop in profit-making position. So I initially place the stop at entry and later on try to use it as a trailing stop, maintaining 15 pips from that of the original position. I also use the trailing stop in the hedge position if the position is making profit. If you use the trailing stop, sometimes the platform providers, they just catch hold of your position and fill it. You have to be smart enough and you should be able to make it as a manual trailing stop. Then table. Have you written any book? As far as my trading system is concerned, it does not have much of a volume to write in the form of a book. All the information I have given, predominant of the information I have given it in my trading system webinar, which is being listed in fxtrade.net. So if you go to fxtrade.net and search under the profile Dr. Sivaraman, you will come across the 10 webinar series, My Trading System. And all the informations are given there. See, I don't believe in doing a marketing of this information. See, it is actually nothing but a conspiracy theory. about the hidden informations of the players. How can I write a book? You tell me. Then Kausi. If market for any pair is currently trading lower than that of 330 GMT, take a sell position. Yes, if they are holding below that of the initial low for more than 30 minutes after breaching the low, you can definitely take a sell position and you will be able to see that you are able to keep stop at entry. And also see that the new low they breach afterwards. And it should not be a quick downward move. If it is a quick downward move and forming the new low and stop cutting the low for more than 30 minutes, that means it is a downward extended move in order to make a rise of the upward intentional move. So that you need to understand. But if you practice it on a daily basis, in a few days, definitely you will be able to perfect it. And Radhakrishnan. So you take the course from FX Street at 3:30 GMT to record the lows and the highs. I'm using this live market code page and the link for that. You can take it from FX Street also. There are various code pages available, and whichever is convenient to you, you can use it. Mike Martin, are you not interested in high and the low between 230 and 2? See, I have to take the highs and the lows, what they set around 330 GMT, because sometimes they may set the high by 230 GMT and set the low by 330 GMT. Sometimes they set the low by 230 GMT and the high by 330 GMT. Between 230 and 330, they quickly set the high and the low. So if you note down by 330 GMT, the high and the low, that will be the high and the low for the day. Initial highs and the low for the day. Okay, we will wrap up. It's getting late. I will explain about the hedging during second part because FX Trade has asked the question. Yeah, if you give the request in Skype, I will add it. And is it possible? Can you give me the PowerPoint presentation to my? No, I cannot send it, sir. Okay, no more questions. You can take it from FX Street, and this webinar is being recorded, and it will be displayed in FX Street under the archives. Then from there, you can just download it, or you can watch the webinar live, recorded webinar. Okay, so it is getting late. I have to wind up the webinar. So I'll come back by 14 GMT and show you the results of the trades, what I had done it. And these are all the 3 positions I have taken. And also, I will try to refer to that of the initial highs and the lows, and also to that of the current highs and the lows, what you see during that of the European session. During the US session, I'll try to refer it so that we'll be able to understand how a simple live market code page with the help of the net changes and the high and the low, we can easily track in all the 6 pairs what they are trying to do. And if you understand all the 6 pairs, then automatically you understand all the other crosses, how they are handling it. Okay. Thank you one and all. See you by 14 GMT.